Welcome everyone. In this video, I'm going to take a closer look at Tesla, particularly after the last 2 days, the stock was up by mid-single digits. And as you can see in the chart, it has broken critical resistance. Call me crazy. I'm not a fan on technical analysis, but that looks good. So let's see what happened, particularly today, because the stock is up 7%, and I don't see any relevant news. I mean, yeah, you had Robin Denholm, the chair of Tesla, that went live on Bloomberg TV, and she said that the generous pay package contemplates a different role for Musk, leaving Musk's political activism up to him. All right. Essentially, she's saying that she doesn't give a fuck about whatever Musk wants to do with his political affairs, which is great news, of course, but I don't think it's enough to motivate a 7% jump in the share price. I mean, let's be honest. So during the interview, I think she was, I wanted to highlight this because during the interview, she was asked on, Tesla shares went down 50%. Due to Elon's involvement in the Trump administration. So what I found impressive is that she dismissed any negative fallout on the stock to Musk's political affiliation. I don't know. I want to believe she's right. I want to believe she's honest. So I will assume that she actually believes this. Moving on. So what we have is the EV demand, all right? September 30th, the EV tax credit, those $7,500 USD are going to disappear, as well as the fines that some companies have to pay if they don't meet with certain standards. And that's a very good news for Tesla. In fact, if I pull up the street expectations for next quarter, let's see. Let me show you what the street expects in terms of earnings for Q3, which is really good. So the top, when I say really good, you have to take it with a pinch of salt, right? When I say really good, it means that the growth is not going to decline in Q3. So the estimates pricing a 1% decline in sales, and that's significantly better than what we have seen in the previous, in the previous quarters. I mean, if I look at Fiscal AI and I go at Tesla, just to see the magnitude of the growth deceleration. By the way, I'm bullish on Tesla. I may sound negative, but I'm quite bullish on the company. Of course, you can see this with the years. I mean, if we look at the last 5 years, this revenue growth, revenue contraction, in fact, looks awful. And if you look at quarterly values, it was down 11%. Revenue was down 11% in the last quarter. Maybe you don't see it because I'm in the way. Down 11% last quarter, down 9% in Q1. Yeah. So 2025 was an awful year for the company. Now, this is actually good news. The fact that revenue is going to relatively stabilize, in Q3 and Q4, it's relatively fine. And then if you're wondering what's going to happen with the increase in Q1 onwards, the reason is because Q1 this year was so bad, you can imagine why, that, if you're comparing a new quarter 12 months from now with a quarter that was really bad, it's not difficult to reach this level of sales. So something to take into account there. Of course, on EPS, it looks awful. On EPS, there is a 31% decline, followed by another 35% decline in Q4. Again, the reason why you see a massive improvement in Q1 26 is basically because you're comparing that quarter to Q1 25, which was awful, right? So it's not difficult to grow from an awfully bad quarter. All right. So, let's see. Related to the EV demand, the EV penetration the EV penetration rate for September could reach 10% because of the front-loading effects. So because September 30th, which is the end of Q3, you end that tax credit, there is a front-loading effect of buyers rushing into, to buy now that they have the chance to take advantage of the $7,500 in credits. So the EV market share rose to 9.1% of the total market in August, and this was close to a record high, right? A record high in the midst of the current administration, which is not very supportive of EVs and anything electrical. And there you go. And the EV market is almost at all-time highs. So that's very positive for Tesla. And yeah, Q3 could be a good one. Although the outlook for Q4 is probably going to be awful, so I wouldn't be trading around earnings on this stock. So EV sales, this is what I mean. EV sales are expected to drop sharply in Q4 into 2026 because this tax credit is not going to be longer available. Let me move my profile so you can read as well. EV sales from General Motors and Ford have already started to scale back. So yeah, these companies are pretty much giving up on their EV plans. And yeah, the article is still saying that Tesla derives most of its revenue from auto sales. I mean, if I go back to Fiscal AI, it's not most, it's pretty much all of its revenue. The energy segment is pretty much peanuts. So if you look at the common size, automotive is 70% of the overall revenue, energy is 12%. Then you have actually total automotive because you have to take into account leasing and regulatory credits. And by the way, there is a big decline. There's going to be a huge decline in regulatory credits. This 2% is going to disappear because you no longer have companies that are going to have to buy those credits because Trump is getting rid of them, which is, I'm not an EV guy, I have to say. I drive a 24-year-old MG TF160, which I absolutely love, and I really wouldn't change for a Tesla. Okay, I don't know. I'm not a big fan of EVs, especially because I do long trips, and I never have to worry about where is the next petrol station. I don't even know the charging station. I don't even know how you call them because the infrastructure in Europe is awful, and you don't really have enough. Especially in some banana countries in East Europe, you really don't have that network which will assure you that you are not in the middle of nowhere and now you don't even know who to call because there are no services to go next to your car and charge your car. And again, I'm referring to certain countries in East Europe, not all of them. Good. So back to the topic. It turns out that, most of the revenue comes from the segment. And I believe this article is the typical article on Tesla. Tesla is not a value stock. I don't know why people look at fundamentals. Fundamentals are important because if you see a decline in revenue, that's, annually. So last 12 months, revenue was down by, let me see here, total revenue, 5%. Okay, so this trend is awful. Okay, so this is overall revenue. And again, you don't see it because I'm in the way. But that trend, okay, looks awful. And you can't ignore fundamentals, but the share price is really not following that, that trend. I mean, if you look at the past, so this is the past 5 years in terms of share price, and this is the past 5 years in terms of revenue growth, right? And the chart really doesn't look the same, So, something to consider that this is a narrative stock, and narrative stock demand a good narrative. And I'm here to say that Tesla has a good narrative looking for the next 3 months, maybe less, 2 months. So I'm bullish on Tesla, but on a very short time frame. Because I believe once the $1 trillion compensation package, which I'm going to discuss, don't worry, once that's going to be approved, what's the next catalyst? I don't know. I just don't see anything new. But I have to recognize that when I first read about the compensation package, I really didn't expect that new to come out, out of nowhere. So I don't know. Maybe updates on Optimus could bring the hype to the stock. I'm not really sure what's going to be, but I know for sure the EV segment is cooked. There is no doubt on that. Maybe the affordable model. Maybe we're going to have some updates on that. So speaking of EVs, we have another piece of news. Trump's deregulatory push hands Detroit automakers multi-billion-dollar boost. Exactly. So as I said before, there is a rollback on EV incentives and emission rules is reshaping the US auto industry. So General Motors, Ford, Stellantis are shifting resources away from EV models towards pickups, hybrids, and even big engines like Jeep's Hemi V8. General Motors recently cut EV production plans at 2 factories, and while Ford scrapped a planned electric SUV to fund internal combustion modules. Stellantis, meanwhile, is reviving its once retired V8. Great. So the administration 3.4 trillion budget eliminates the 7.5 EV tax credit, as I said, and cancels fines for missing fuel economy targets, reducing the need for regulatory credits. Right, and General Motors, they spent 3.5 billion on credits, mostly bought from Tesla in 2022. Ford said it has already saved 1.5 billion this year, I believe, from regulatory credits. Anyways, not good for EVs. And if you see the Tesla market share in the US, it dropped to the lowest since 2017. That's 8 years, right? So there was an article on Reuters, Tesla that had an 80% of the US EV markets, accounted for 38% of total sales, EV sales in the United States in August. And that's the first time it was below 40 since October 2017, when the company was ramping up the Model 3. So the news going to say that one of the I believe this is one of the analysts. Yeah, that's the analyst firm. So they were saying that I believe this is the director. Yeah, Stephanie Valdez. I know they're positioning themselves as a robotics AI company, but when you're a car company, when you don't have new products, your share will start to decline, which makes sense, because people like new stuff. And for some reason, people believe that new is better. I'm not one of those. That's why I drive a freaking 24-year-old car. And I will drive even older ones, but I don't have money for that. So I will drive, a Corvette from 68. That would be one of my dream cars, to be honest. Well, dreaming is free, right? I will choose that Corvette over any Tesla any day. Any day. Like any day. But I like to do mechanics. I like to get under the car and do maintenance, so you don't have to die with a Tesla, and not everyone is like me. So, you have to take into account that factor as well, especially with the new Gen Z, however the heck they're called. Which is a really strange generation. They don't really have this old school, I don't know. I don't even know what word I'm looking for. Old school preferences in regards to cars. All right, moving on. So the Tesla's market share fell to 42% from 48 in June, and that drop was the biggest one since March, when Ford actually released the Mach-E. So it seems that the company has a lot of competitors, and those competitors are cutting prices and giving incentives. Tesla's not doing that, so market share is going down. So sales of new EVs jumped more than 24% more month over month in July. So the overall market is expanding, but Tesla's market share is contracting. And that's bad, because when you see a market that goes up by, the EV market that goes up by 24% in one month, month over month in July, and you see Tesla sales rising to 7%, that's not particularly attractive. Now, in August, the growth was even slower, 3.1%, and the broader market grew by 14%, according to the preliminary data. Time to go through the big topic right now. So, this is the compensation package. I'm using, ChatGPT Plus, so you're welcome. And let's go into the details. This is a summary. So, as you probably know, there's a structure for the 1 trillion compensation package. The 1 trillion figure is an estimation using today's market cap and the number of outstanding shares that, reportedly Elon will receive if he was to meet all the milestones. So there are 12 tranches of performance-based restricted stock. So these are not options. That total 423 million shares, and that's approximately 12% of of Tesla, 12% of the company. That's the compensation package. Now, Elon already owns, I think it was around 20% of the company. So this is not, a huge. It is a huge one in terms of numbers, but it's not really huge in terms of what he already owns in the company. So let me just double check that. Because I think 15%, sorry, it's not that much. So it's 15.7%. So that will be 27% ownership in the company. So the market cap has to climb from 2 trillion to 8.5, measured by 30-day and 6-month averages. And there are 12 operational milestones, like, for example, adjusted EBITDA, profitability, how many robotaxis have to be deployed, how many humanoids you have to sell, etc. So after a tranche is earned, voting rights kick in, but the economics vesting happens at 7.5 years if earned between 1 and 5 years, or 10 years if earned between 6 and 10 years. So this clause is slightly more restrictive, and once you actually win, it's not difficult to realize that you have 12 tranches and 12% ownership. Each tranche is 1% ownership. So if you meet the criteria, all right, and you earned that 1% ownership, it's not transferable until after 7.5 years if you earned that criteria. So if you meet the criteria in the first 5 years, starting from September 3rd, I believe, and 10 years if you earn it between 6 and 10. Okay, so that's a long-term plan, and it's probably going to keep Musk tied to the company in the long run, which, you had a few doubts, during the Trump, what I call the Trump sell-off, in Q1, Q2 this year, where, some people were saying that Musk was not that interested in Tesla and he was interested in politics. Then he probably realized that politics is going to take him nowhere because he's not American. And then he had, I think that the whole arguments between him and Trump, I think it was, call me crazy, I think it was plotted. Though I think it's real, so I think the actual argument it's there. But the reason why he made it public is because he really wanted to distance himself from the administration, because that association was the main factor that declined the stock. So now he was in a position of he's out of Doge, and the stock is down 50%. So he had to cut the ties, and that's why he made it public, in all those tweets, which was a freaking shit show, to be honest. So I do think that was real, the tension, but I think it was dramatized on social media for the public to disassociate him with the Trump administration. I think that was the main reason. So looking on at other points of this plan, I don't think if it's worth to go into all the details, because you have, as I said, you have two different requirements. You have a market cap requirement, and then you have operational requirements. So there are 12 tranches, and each tranche is earned if you meet a market cap requirement and one of the milestones, any milestone, to be honest. And I'm not sure this summary contains all those milestones. I can see it doesn't, which is fine. So, for example, one of a few of these operational milestones, we have 20 million Tesla vehicles delivered, cumulative, 10 million active full self-driving subscriptions average over 3 consecutive months, 1 million bots, 1 million robotaxis in commercial operation. So you can see you can meet any of those milestones, and then you have some milestones on adjusted EBITDA. And the market cap milestone, all right, so you must meet one of these, and then your market cap milestone is the tranche 1 is at 2 trillion, which is quite far from today's market cap. Call me crazy, but today's market cap is 1.3, I believe. 1.2, actually. So if it's 1.2, and you need it to start at 2 trillion, all right, how much are we talking about? We're talking about an increase of 66%, okay? So 66% from today's share price of 394, assuming constant shares, we're talking about 660, all right, a share price of 660 is not even here. That would be an all-time high. So that's the share price to reach the 2 trillion, which is the very first tranche of the milestone plan. So I don't know. Is he going to be able to achieve this? It's difficult to say. I mean, based on hype alone, yeah, the share price can go up because people bid up the share price when the story around Tesla is positive, when you have a lot of exciting things going on. But when you don't, and when you don't have, new vehicles, and you don't have, the Robotaxi deployment is actually quite slow. I think in the Bay Area, they're still testing with, people that are, drivers. They're not drivers. They're sitting on the passenger seat, but they're there just in case. So it's a bit weird, the deployment, and it's going to take time. It's non-linear. So in the very long run, if you ask me 5 years from now, is this going to be beyond 400 or below? No doubts above, in my opinion. But in the meantime, maybe it's going to test all-time highs. And then you have the news, which is the plan probably is going to be approved. By the way, speaking of the plan, it has been proposed, but it hasn't been voted. So there is a shareholder meeting on November 6th, I think is the meeting. Let me do Control F. October then? Yeah, November 6th, sorry. So the shareholder will have to vote on the new plan and see what is the results, because we don't know yet. I think it's going to go through. Most likely it's probably going to go through. So we will see how the market is going to react to that. I think that it's likely we're going to see all-time highs. I don't think it's a stretch. And if you want to play that with options, I think it's a bit crazy. I mean, if you look at the options markets, let me show you. So Tesla. And if I look, for example, at today's price, right, from the all-time highs, that's 20% increase. And November 6th, if we assume the November 21st calls, the break-even sits at the money, by the way, sits at 11%. Okay, so if we assume a 20% upside, which is a big assumption to all-time highs, let me just check exactly how much was that, 22, I believe, 22. So if I assume a 22% movement, at expiration, we're talking about 111% return on these call options. And of course, if you reach all-time highs before that, it's slightly more, like 111%. And if you go out of the money, no, it doesn't go by a lot. 120% at the best case if you go slightly out of money. Now, of course, that's $4,000, which is crazy expensive. And this is freaking gambling, So is he going to go to all-time highs? Yes, but it's also likely that he's going to pull back. And when it pulls back, IV is going to drop and it's going to absolutely screw you over. Just imagine it drops back by mid-end of September. You will be down, 50%, 60% on your calls. So this is gambling, by the way. That's why I'm not really keen on buying calls on Tesla. I would rather buy calls on the SPY or the SPX. I mean, SPY, it's, call me crazy, but this is a breakout. Okay? And from here, you have a FOMC meeting next week when, Chair Powell is most likely going to cut one rate. And that's going to be a catalyst. And I don't know, I'm thinking about some call options on the SPY not even around, but even on Monday, because I believe the day before the FOMC meeting, the call options are going to be expensive as hell. But if you buy one, let's say January 16th or December 19th, because the third meeting, we have one in September, November, and December. So the one in December is on December 10th. And yeah, 3% is the break even. And I think 3% is very little, so the IV on the SPY is quite low compared to Tesla. Anyways, these are my thoughts on Tesla. I think overall, the stock looks interesting in the short term. but I'm not sure what's going to happen going into Q4 and particularly next year in fiscal 2026. So I'm quite curious to see, what is the traction for robotaxis. I don't see it now as strong as initially hyped, and Optimus is still far away from mass production. So I think so far the sentiment is going to improve going into the annual shareholder meeting with the $1 trillion package. But once this catalyst is materialized, I will have to reconsider and see, what's the ace under the sleeve. Maybe there is one. Who knows? Maybe he's going to divest. No, definitely not. All right, that's it for the video. Thanks for watching, and I'll see you in the next one.